Markets are higher going into the closing bell, trying to break a 4-day losing streak. Joining us now is Ellen Lee, portfolio manager at Causeway Capital Management. The firm has roughly $34 billion under management, so quite a bit of client money at stake here. Ellen, you've been hearing a lot of commentary about the after-the-bell earnings reports. We're anticipating about some of the dynamics in the market. As a portfolio manager, is this a market where you're worried?
I think worried is a strong word, but obviously, I'm cautiously tepid on the markets going into 2023. I think there's going to be a lot of negative earnings revision. And with interest rates where they are, all the policy measures that central banks have taken, this is going to impact demand. Remember, there's always a time lag between when policies get implemented versus impact on demand. And I think that's going to play out in 2023. The economy is going to slow down globally. Now,
Ellen, this is interesting. We've heard a number of sell-side analysts and strategists talk about the possibility of earnings coming in weaker, some earnings growth issues coming up. You're a person who puts money to work based upon your own evaluation, and you're saying that you are worried that there's going to be an earnings slowdown. And how big of an effect will that have on the markets? Just how far could we fall if there really does become an earnings deceleration?
I mean, at Causeway, we're looking at companies' valuations very carefully. And I think one of the things we're excited about are areas where there is a lot of negative earnings revision, and there's always going to be overselling. So we're looking at areas of consumer discretionary stocks where we see good opportunities. Obviously, there are some we're watching closely. But the reality is, when earnings fall, the prices are going to fall. But we want to take advantage of the long-term investment horizon we have, and we want to invest through the cycle. And also remember, sticking to our discipline of looking at value stocks is going to pay off. We believe that the era of zero-cost money is over, and hence, valuations are going to be really key.
Okay, so if valuations are going to be key, what types of companies go on the shopping list there? We know value versus growth is fairly large level. What types of industry groups and what types of companies are you looking at specifically?
We're looking at companies bottom up. But, if I look at consumer staple side, we like stocks like Danone, which trade at below 15 times. It's a French yogurt maker, and they have changed their board completely in the last 2 years. It's a great restructuring story. So that's one. Another one is UniCredit, an Italian bank that, trades at below 0.5 times tangible book. These companies have, a lot of running room in terms of, the capital structure that they have. So looking at UniCredit, it is going to be able to give back a lot of capital returns because they're not really suffering from any sort of credit losses, at least in the short term. Remember, during COVID, people were really negative on these banks, but actually the hit was taken by the central banks, not the individual banks.
All right, we've got a couple of minutes to go before the closing bell here. Ellen, before we let you leave, one other value part of the market that's talked about a lot over the last 12 to 18 months has been energy, but the way it's run makes it seem like it's not value anymore. Do you still think that there's momentum for the energy trade, or are you staying away?
This is very tricky. Obviously, the reason why energy continued to do well, you cannot discount the factor of the war in Ukraine. Of course, energy prices have fallen. I think the view is that with the geopolitical headwind, energy prices won't come down, significantly for a while. But at the end of the day, when economy slows down, demand will fall. And I think, when you think of a normalized earnings for energy, I think they could be vulnerable, too, if we have a real slowdown in 2023. So we are cautious.
All right. Ellen Lee at Causeway Capital, thank you very much for the thoughts. We'll see you soon.